Breaking news in the Ripple XRP and SEC crypto case of the century. This will determine pretty much every single altcoin, whether it is a security or not, because Ripple is in the best position. They spent $100 million on lawyers, and they will determine essentially what the cases are going to be like in the future. This includes all the other altcoins, whether they'll be securities governed by the SEC, and even Ethereum, which, by the way, the SEC now has the CFTC to thank, because the CFTC head just came out and said that only Bitcoin is not a security, walking back his earlier comments about Ethereum, and that implies that even stable coins could be considered securities. That's actually really scary. But anyways, getting back to this, the SEC basically claims that even though there's actually no physical contract between Ripple and XRP holders, it's a security because they had marketing statements to that effect that they're helping XRP and the system or whatever that was. Ripple obviously claims that those marketing things are very little from the past. There were disclaimers on those, and there was actually no physical contract. Basically, this really comes down to the Howey test, which describes a contract, transaction, or scheme satisfying an investment contract which satisfies a security. And essentially what they're saying is that even though there is no contract, there is a scheme. And Ripple basically is saying that you can't have a scheme without a contract. You need to have both of those to apply together. And then lastly, as you can see here, the SEC says that the post-sale obligations are not relevant and only an expectation of profit is relevant, whereas Ripple claims that you need to have an ongoing relationship between the promoter and the token, and there is no current relationship at this point, or there ever was. As you can see, Ripple and SEC spar over whether disclaimers were relevant and whether they work or not. Ripple claims they do. In addition, the SEC tries to show that when the Chairman Clayton of the SEC said ICOs are securities, he actually said ICOs and cryptocurrencies, but Ripple says that XRP doesn't meet the essential ingredients of the Howey test. Additionally, the SEC says despite, this is super important, despite the FinCEN stating XRP was a virtual currency, nothing says that assets cannot be regulated differently by various agencies. Meaning some agencies can call something a security, something can call a commodity and a currency all simultaneously. Now that is a big problem, and the CFTC says that nothing limits or supersedes the SEC, meaning the CFTC can claim something as a commodity, but it doesn't override the SEC's determination. That's why this is important, that we basically exclude the SEC and show that it's not a security. Again, not financial advice as always, but we're going to continue on. Most importantly, the SEC loses their own main witness, where XRP and the Ripple team essentially has shown that 90% of Ripple's pricing all gets based off of market fluctuations and market forces like the price of Bitcoin, etc., and not XRP through Ripple's actions. And lastly, Ripple says that all post-2018 sales would not be a problem because it's all market forces.